The finance bill is 500 pages long. Most people are not going to read it. So here's the parts that will actually matter to your wallet, your grocery bill, and your work. First, sanitary pads and tampons. They have been added to the sales tax exemption list. That means the government is removing sales tax from these products. So yes, the period tax is being abolished. Contraceptives are also added to the exemption list in the legal schedule. But there is one awkward detail. The salient features also say the exemption on family planning devices is being withdrawn. So the safe reading is this: contraceptives are listed as exempt, but not every family planning item may necessarily get the same treatment. That needs final FBR clarity once the law is passed. Now, baby milk. Packaged milk, fat-filled milk, infant preparations, and other milk products sold in retail packing are being added to the third schedule. That does not simply mean the GST rate has been increased. It means the tax will be charged at the consumer price, basically the printed retail price, and collected earlier from the manufacturer. So the rate may not look different on paper, but the effective tax burden can rise. And if companies pass that on, packaged milk and infant products could become more expensive. This is the important distinction. Unpackaged milk is one thing, packaged milk and infant preparations are another. Then social media income. If you make money from YouTube, Facebook, TikTok, Instagram, or similar platforms, the bill introduces withholding tax on that income. Banks and financial institutions will deduct it when the money comes into your account. The rate is 5%. For resident Pakistanis, this is treated as minimum tax. For non-residents without a permanent establishment in Pakistan, it is final tax. In simple words, creators are being brought more clarity into the tax net. This is not only about influencers with millions of followers, it can also affect digital publishers, content creators, freelancers, and anyone receiving monetized platform income through banking channels. There is also a small relief for people who use cards abroad. Advance tax on foreign payments through debit, credit, and prepaid cards is being reduced from 5% to 0.5%. So foreign card payments become less heavily taxed. But e-cigarette users get the opposite treatment. Federal excise duty on e-liquid is going up from 10,000 rupees to 16,500 rupees per kg. At the same time, the earlier 65% of retail price mechanism is being removed. So the impact deepens on the product, but the fixed duty per kg is clearly higher. There are also changes that people may feel indirectly. More packaged goods are being added to retail price sales tax. That includes oils, confectionery, pasta, noodles, sauces, ketchup, cosmetics, deodorants, tissues, footwear, crockery, and household utensils. Again, this is not always a headline rate increase. It is a change in how tax is calculated. That is why prices may move quietly, product by product. There is some relief too. EV concessions are extended till June 30, 2027. The concessional 0.25% tax rate for IT and IT-enabled services exports is extended to tax year 2029. So the TLDR is pads and tampons get relief. Contraceptives are listed for exemption, with some wording that still needs clarity. Packaged milk and infant products could face price pressure. Social media income gets 5% withholding. Foreign card payments get relief. E-liquid gets more expensive. And the government gets a much tighter view of where money is coming from, where it is going to, and who has not been reporting.